Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, for the first time in 25 years, the presidents of the US and Syria meet. US President Donald Trump met with interim Syrian President Ahmed al-Sharaa, the sidelines of the Gulf Cooperation Council summit. As trade uncertainties linger, global beauty firm L'Oreal sees the Philippines as a key consumer market. We have an excerpt of my exclusive interview with Vismay Sharma of L'Oreal. And checking in on the condo oversupply in Metro Manila and how the midterm elections might have spurred sales. We speak with Joey Bondoc of Colliers Philippines. For the first time in a quarter of a century, the leaders of the US and Syria have met in what Syrians hope to be a turning point for their war-torn country after 50 years living under the Assad dictatorship. US President Donald Trump and interim Syrian President Ahmed al-Sharaa huddled at the sidelines of the Gulf Cooperation Council summit. Trump earlier announced that the US will lift all sanctions in Syria, an announcement that shocked even his own advisors.
After discussing the situation with Crown Prince Mohammed and President Erdogan of Turkey, I am also ordering the cessation of sanctions against Syria to give them a fresh start. It gives them a chance for greatness.
The decision to lift the sanctions was a historic, courageous decision that alleviated the suffering of the people, helped in their renaissance, and laid the foundations for stability in the region.
Saudi Arabia's Crown Prince Mohammed bin Salman has underscored that Arab Gulf states are working with the U.S. to de-escalate tensions as the Israel-Hamas war drags on. Meanwhile, Qatar Airways signed a $200 million deal yesterday, Wednesday, to purchase 160 jets from Boeing. Boeing CEO Kelly Ortberg said this is the largest order of jets in the manufacturer's history. Trump and the Emir of Qatar witnessed the signing ceremony in Doha. And U.S. markets are mixed as investors turn optimistic on potential trade deals, but worrisome on the state of the economy. The Dow declined yesterday, Wednesday, by 0.2%. S&P 500 rose by 0.1%, and the Nasdaq gained by nearly 0.75%. 10-year Treasury yield settled above the 4.5% mark for the first time since February. Gold prices declined to $3,181 per troy ounce. Markets point to a decline when the markets open later tonight Manila time. The Dow falling by over 1/3%. S&P 500 declines by 0.1%, and the Nasdaq slides by less than 0.1%. Let's take a look at the Asian markets. They are looking mixed in the first hour of trading this Thursday, with Australia's ASX 200 slightly up by less than 0.1%. South Korea's Kospi down by nearly 1/3%, and Japan's Nikkei 225 falls by 0.9%. Take a look at the Philippine markets this Thursday. The Philippine Stock Exchange opens today lower by 0.2% to 6,537. The stock market closed yesterday, Wednesday, lower by 0.2%, though still managing above the 6,500 mark. Let's take a look at the Philippine peso. It opened slightly stronger at 55.80 to the dollar. Peso closed yesterday a tad weaker at 55.855 against the greenback. Our next guest came on this show last February talking to us about the typical pickup in condo sales in an election year. And today, we check back on property consultancy firm Colliers Philippines on what the just concluded midterm elections meant for condo sales. With us now is Research Director Joey Bondoc. So good to see you again. Joey, welcome back to the program.
Good morning, Cathy.
Right, yeah, I remember that conversation from February, and then I said, I'll have you back at the end of the midterm elections and see whether there had really been a pickup, the usual pickup in condo sales whenever there's an election exercise, whether it be presidential or midterm. How did it go then?
Well, unfortunately, Cathy, it has not improved. When you talk about condominium take-up in Metro Manila, so right now, we still have a sizable number of unsold, ready-for-occupancy units in the capital region. But what's positive, Cathy, is that the demand outside of Metro Manila has really been bullish. And we're looking at the Central Luzon, Calabarzon, Cebu, Davao, Bacolod, Iloilo. These are cities, localities that continue to record very strong take-up, especially for the horizontal developments, house and lot only. In Cavite, for example, one of the most expensive is at about 51,000 pesos per square meter. About what, 10, 17 million pesos per unit, almost sold out already.
So if and when we compare the previous election years with this one, it appears that the demand and the buying really happened outside of Metro Manila.
Correct.
So that is what makes this unique.
That's right.
What about Metro Manila, though? I mean, what's keeping buyers
Well,
from picking up
I think one of the major,
ready for occupancy condos?
Well, one of the major reasons really, Cathy, is the elevated mortgage rate at this point. So you have the central bank cutting interest rates, right? Because inflation is tempering. But the average bank mortgage rate is still at 7.7%. It has not really gone down. And
is it a matter of time before it comes down, or?
I think so.
Because rates are coming off.
We perhaps need to look at the second, third, fourth quarter of this year before we see substantial reduction in bank mortgages. So that has really been resulting in elevated prices of condominium. Yields right now very low, 3%. So if you are an investor and if you want to achieve a very good yield, it doesn't make sense at this point, and therefore resulting in a very slow take-up of condominium units. But again, what has been offsetting that is the shift to suburbia. Developers really taking advantage of the strong demand outside of the capital region.
So can I take it then that the purchases were made outright cash? Because if interest rates were a problem, then they wouldn't even buy anything outside and in suburbia.
I think, Cathy, what will really help the Metro Manila condominium market recover over the next few years are the RFO, ready for occupancy promos, being offered by developers. Right now, you don't even have to pay a hefty cash out for you to be able to move in to a ready for occupancy completed condominium unit. Essentially, you're just leasing for what? 36 months. And then after that 36th month, 60% of what you paid can already be deducted from your total payment of that condominium unit. Some developers up to 120 months. You just have to lease it essentially. Some developers offering up to 50% reduction if you pay cash. You have other developers even allowing monthly lease of their condominiums in Boracay. So if you want to work from Boracay, that's a very good prospect if you're a digital nomad.
It wouldn't be called work. It'd be called beach, beach holiday from Boracay. But talk to us about the senatorial lineup, because definitely there will be an impact in the way policies go. In your assessment, and how the new constitution of the Senate will look like, what kinds of policies might drive down that oversupply? What would help?
Well,
and is that something that's needed in the short term?
That's correct.
Given the political issues as well between parties, of course, that they'd have to deal with.
Well, if you really just look at the political situation right now and just focus on the legislation needed by the property market. You have, for example, the Right-of-Way Act amendments. I remember the first ROW Act was passed during the time of President Aquino. That was 2016. And we believe that this is up for amendments. We have major projects. In Metro Manila, you have subway, for example. You have MRT-7. We are hearing reports that there are delays in their completion. Subway, delayed by 4 years already. 2028, pushed back to 2032. And what's interesting here is, and a little concerning, is that right-of-way is getting in the way of major infrastructure implementation. We believe that this is a measure that will help stoke demand. Why? Because we always say that infrastructure will help raise land and property prices. They will help dictate the strategies of developers. And this is very timely because developers have been shifting to suburbia. And the implementation of these infrastructure projects, airports, subways, railways, will definitely help guide developers. Where should they invest? Where should they land bank? And where should they develop condominiums or house and lot projects?
The move to suburbia also speaks loads about where people want to work.
That's correct.
Has that already shifted in the manner that's affecting the vacancies that we're still seeing in the office market?
Well, if you look at Metro Manila, Cathy, as we reported, it's almost 20%, 19.7%. We still have
it's
about...
still high.
That
As
is
you can
correct.
Take a look at that graph. It's really been trending higher.
Yeah, and again, we're projecting a 22% vacancy by the end of 2025. But this is mainly because of supply-driven increase in vacancy. What's interesting is that a lot of companies are still occupying office space. They are now transferring and looking for higher quality office spaces. And it is what we call, the shift, the move to quality, higher quality office spaces being offered at a discount. There's an interesting survey that we had during our previous briefings. Majority of our respondents saying they are more effective when they work in a traditional office setup, and majority of our clients, respondents, now implementing 100% return to office. So that's a very interesting...
Was that survey according to employers or employees? Because you're going to get...
Actually, both employers and employees. Our
Maybe the sentiment of employees wanting a little bit of hybrid, right?
That's correct. But that's pretty interesting because, if you really redesign your office space, it will really entice more employees to return to office. We have our new office space in Makati, and it really encourages us to report to office.
Right. Well,
we have these refreshed spaces.
As you say, refresh, we're happy in the studio. And I thank you for joining us.
Thank you,
One of the initial guests that we have here in the refurbished setup, Joey Bondoc of Colliers Philippines, joining us. And you're watching Money Talks. Coming right up, the positive response from Thailand's trade proposal to the U.S. And how does a global brand navigate risks amid shifting trade winds? And we're talking about a global beauty firm. We'll find out after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Thailand has submitted a 5-point trade proposal to the U.S., earning praises from Treasury Secretary Scott Bessent. Thailand's facing a 36% reciprocal tariff, one of the highest in Asia. The Thai Prime Minister said the proposal outlines 5 initiatives aimed at enhancing bilateral trade and reducing Thailand's trade surplus with the U.S. by 50% in 5 years. These initiatives include developing the food processing industry, increased imports of U.S. products, and promoting Thai investment in the U.S., among others. Meanwhile, the Bank of Thailand has projected slower economic growth due to Trump's tariffs. Thailand's central bank is prepared to cut rates in the future to align financial conditions with the evolving economic outlook. The bank added that foreign tourist arrivals may not return to pre-pandemic levels of 40 million annually in the next 1 to 2 years. The Bank of Thailand eased rates at the last 2 consecutive meetings. World Trade Organization Director General Ngozi Okonjo-Iweala and Japanese Foreign Minister Takeshi Iwaya met in Tokyo amid tensions over global trade. The Japanese government website says the WTO's chief's visit comes on the 30th anniversary of the establishment of the organization. Just last month, the WTO sharply cut its forecast for global merchandise trade from solid growth to a decline. The agency says U.S. tariffs and spillover impact could lead to the heaviest trade slump since the height of the COVID-19 pandemic.
As you know, these anniversaries come in the midst of some of the biggest disruptions to global trade in history. The multilateral trading system is under stress, with rising trade tensions and risks of fragmentation. That said, the WTO remains a bedrock for openness and predictability in global trade.
As global markets brace for shifting trade winds, especially with fresh uncertainty around U.S. tariffs, how are multinational firms recalibrating their strategies across emerging regions? In this exclusive interview, I speak with Vismay Sharma, president of L'Oreal Sapmina, about how one of the world's top beauty brands is navigating risk and sustaining double-digit growth.
Well, firstly, look, as far as the tariffs from the US are concerned, it's difficult for us to say how this is going to pan out because obviously, as you know, there's a 90-day period during which all the governments are negotiating with the US government to find the best solution. If I was to look at specifically on my part of the world or SAPMENA, I think globally the countries in this part of the world are very dynamic. The economies are dynamic. The beauty market has been double digit and the fundamentals continue to be very strong. So I don't see that changing. We are very confident that there will still be double digit growth in beauty as a category. Within SAPMENA, we've been putting our plans in place and whichever way things go, we don't see a marked difference on the beauty market. We don't see it going down or going up significantly from what our projections are. So that double-digit growth will continue, and it's going to be the case with Philippines as well. This region we cover with, there are 35 countries that we sell our products in. This region currently is 40% of the world's population. It's 3 billion people, more than 3 billion people that are living in SAPMENA. And overall, in terms of global beauty market, this is about 10% of the beauty market. So you can very clearly, very quickly do the math that when you have 40% of the population, but only 10% of the beauty market, there's a huge potential for growth. And that's where our intention and our deliberation and our intent has come to build this business and build growth and bring growth to the group. And within that overall thing is Philippines, and Philippines for us is an extremely important market. It's a country very young, very dynamic, 116 million consumers, a very rapidly growing economy because in the APAC region at 6% plus, it's one of the fastest growing economy.
A strategic market, in fact, that you opened a new headquarters in Ortigas Center in Metro Manila. Could you give us an idea how big your staff is and if you're intending to hire more?
But look, in terms of staff, we always look at the total possibilities, the job requirements, etc. within the company. So we keep on adjusting our staffing requirements. If we launch more brands, we bring more staff. If we open new domains that we work in, the important thing to understand is that a strategic market like this one, whatever resources are required, we are a big global group. We are the largest beauty company in the world with a turnover of almost 45 billion euro. If we need to put resources, we've just done a new headquarter. We have a live streaming studio here. We are putting all the resources, all the capabilities necessary. And if we need to put more people, we can put more people. There's absolutely no question around that.
Well, we can't just talk about the Philippines without talking about the whole ASEAN, of which Indonesia is part. And I know that you've got Indonesia as a production hub in this patch of the world. So, just giving us a comparison with our neighbor, what are the chances of transforming perhaps the Philippines as a second manufacturing hub in Asia?
Well, in terms of manufacturing, so L'Oreal tends to have a strategy of creating high capacity, high technology factories, few and far in between. So if you look at our global manufacturing footprint, firstly, in terms of business, we do business in 150 countries, but we have about 33 manufacturing plants across the world. So we don't put manufacturing plants and we don't feel the need to put manufacturing plants in every single market. But at this point in time, what we are focusing on is a lot more localized activation in Philippines. So really taking the time, being very intentional about understanding consumer insights, creating the right kind of content, empowering our teams over here to create that content, create the connection with our consumers. We are doing a lot of work with our e-commerce partners, with partners like Shopee, partners like TikTok Shop, to create content.
How are you understanding the Filipino consumer, given that, as you say, they're young, they're also digitally savvy, deploying AI-enabled maybe skincare solutions, for instance, those that enable the consumer to try to figure out whether this lippy color is the right color so that the purchase won't be a frustrated purchase, or that someone gets a breakout because nobody knew that until one used it.
So you're taking me in a very interesting place. It's what we call beauty tech, and we spoke about it at the beginning of the call as well. So beauty tech is a combination of bringing technology, bringing knowledge, large data to the service of creating outstanding experiences for our consumers. So L'Oreal is a company which was created by scientists 116 years ago. So we have science at the heart of everything that we do. And about 12, 14 years ago, we decided to embark on a digital revolution to really go after digital. We could see that digital social media is going to be a game changer within beauty as a category. And we went after this with a lot of intent. We also went after e-commerce, and today we are a global leader in terms of e-commerce. Over 28% of our turnover globally comes from e-commerce.
So if we were to tell a startup here, maybe listening now to our chat, what are you looking for here in the Philippines in the startup system that would be tech enabling as a solution and also sustainable?
So when we talk of startups, we are very confident. And if you look at the problems of the future are going to be big, and they will not be solved by one company or one organization or one individual. It's about partnership. So innovation is going to come from within L'Oreal, but equally we are very open to innovation from the outside, and very often it comes from startups. So last year we launched a program called Big Bang. Big Bang is a competition among startups across the region. And essentially what we do is we pick up 5 different domains that are of interest to us. And then the winners of these get a cash grant from us, get sponsorship, get mentorship. And essentially what we look for is real game-changing, scalable ideas, which will have a big positive impact on consumers and their experience, on society, or on sustainability.
Sharma, the president of L'Oreal South Asia, Pacific, Middle East, and North Africa. Coming up after the break, several local companies have released their first quarter earnings reports over the past 48 hours. Stay tuned to Money Talks on One News. Welcome back to Money Talks. I'm Cathy Yang. Several local companies have released their first quarter earnings reports over the past 48 hours. Here's a quick look at how they performed. Let's start with San Miguel Corporation, reporting a sharp increase in its first quarter net income to over 43 billion pesos, up from 8 billion last year. This was driven by foreign exchange gains and a one-time profit from the partial sale of its power assets. Despite an 8% drop in revenue because of lower crude prices and the deconsolidation of the Ilijan power plant, SMC saw a strong performance in its food, liquor, and infrastructure units, along with its solid cost management. Meanwhile, JG Summit Holdings posted a 61% decline in its first quarter net income to 4.3 billion pesos. This was dragged by losses from its petrochemical unit. Its core income also fell sharply after last year's boost from a bank merger. Another decline, this time for DMCI Holdings. The Consuni-led engineering conglomerate's first quarter net income fell by 9% to 5 billion pesos. This was mainly because of lower coal prices and the ongoing integration of its recently acquired cement business. Still, its total revenue rose by 16%, with gains from construction, real estate, and nickel. Mondanisan's first quarter net income also fell by nearly 22% to 2 billion pesos as higher expenses ate into profits. That's despite a nearly 3% increase in its revenue, driven by stronger sales in biscuits, culinary products, and packaged cakes. Their meat alternative business, however, continued to struggle with lower sales. Jollibee Foods Corporation posted an 8% decline in net income to 2.4 billion pesos, hit by higher non-operational costs. Still, system-wide sales rose by nearly 19%, boosted by same-store sales growth and new stores. JFC CEO Ernesto Tanmantiong highlighted strong domestic performance from brands like Mang Inasal and Jollibee. As for Ayala Corp, its first quarter net income fell by 4% to 12.6 billion pesos because of weaker returns from its power and telco segments. Its core net income also fell by 4% from last year. Philinvestland's net income grew by 3% to over 900 million pesos, lifted by residential and commercial segments. Revenue from real estate rose by 9%, while office and retail leasing also posted double-digit gains. Lights, Camera, Cannes. The Cannes Film Festival officially kicked off on May 13th and will run until May 24th. Filmmakers and producers from all over the world have flocked to the French Riviera, but what makes this year extra special for Pinoys is the 5 Filipino-produced films set to screen at the film festival, most of them international co-productions. Among them is Magellan by Lav Diaz, starring Gael Garcia Bernal. The film reimagines the infamous explorer's journey and flips the script on what we think we know about Lapu-Lapu. And then there's Renoir, a coming-of-age drama set in the 1980s Japan, co-produced by Sylvia Sanchez and her daughter Ria Ataydes Nathan Studios. It is competing for the Palme d'Or, marking the Philippines' grand return to the Cannes top competition after nearly 10 years. Young Filipino filmmakers Arvin Bellarmino and Kyla Danel Romero also made the cut with Agapito set in a crumbling bowling alley. An alley, which tells the story of a girl challenging a town's ban on women singing. Both shorts are part of the official selection. Rounding out the lineup is Bleat, a quirky black and white short about a couple who discover that their sacrificial goat is pregnant, leaving them to choose between tradition and, well, basic decency. It's a co-production between the Philippines, Malaysia, and France. That's a whole lot to watch as soon as it's available online. That's it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.